With 2022 fast approaching, investors are wondering what the 2022 real estate market is holding for all of us. To say that the last 20 months have been wild for the US housing market will be a major understatement. 2020 and 2021 witnessed some of the hottest real estate markets we've seen in the past decades. But what can we expect from the real estate market in 2022? Will price increases and bidding wars persist? Will home buyers and real estate investors continue facing listing shortages? Or will the market start cooling down and going back to normal? Hey, my name is Greg, and in today's video, I'm going to answer the hottest questions about the 2022 real estate market. Let's start our analysis of the 2022 real estate market by taking a look at the main factors driving the market next year. As you probably expect, the pandemic will continue to dictate the housing market. Many companies in different industries have conducted extended research on the new reality of remote working. According to the Zillow Home Price Expectation Survey, working from home is here to stay, not only for the duration of the pandemic, but also afterwards. As you can see on the graph, 95% of surveyed economists revealed that at least partial work from home on some days of the week is the preferred modality for many employers and employees and is considered a permanent shift. What does this mean for the 2022 real estate market? Well, this trend is expected to impact the real estate market forecast in a number of different ways. First of all, real estate experts expect the increased demand for homes in suburban secondary and tertiary markets to continue in 2022. This is driven by the fact that more and more people prefer the quiet environment of suburban areas where they can work remotely. Moreover, moving to smaller, less demanded markets is offering at least a partial solution to the problem of housing affordability in the US market, where millions of people cannot afford to buy a home or to rent a place. So, if you're looking for the best location to buy an investment property, look away from large cities like New York, Los Angeles, San Francisco, Boston, and Chicago. Instead, look into smaller markets such as Charlotte, Raleigh, Orlando, Nashville, and Richmond. Rental demand there will be much higher, while property prices are not as high. Another 2002 rental market trend to keep in mind is the increased demand for properties that are friendly to working from home and that offer amenities for outdoor activities. This holds true for both long-term and short-term rental properties. Renters are now prioritizing features such as children playgrounds, gardens with exercise areas, outdoor grills, and green landscapes. You are guaranteed to push up your occupancy rate if you provide tenants with outdoor spaces for both work and entertainment. Another trend in our 2022 real estate market forecast is the higher demand for Airbnb long-term rentals. If this is the first time you hear this term, these are rental properties which you list on platforms like Airbnb, offering discounted rates for weekly or even monthly rentals. With the new reality of remote work, many people are deciding to move away from their home for an extended period of time and settle in an Airbnb long-term rental. So, if this sounds like the right real estate investing strategy for you, remember to provide your rental property with all the features and extras required from a work environment. Going back to the factors driving the 2022 housing market and their repercussions for real estate investors, the rise in the cost of construction materials during the COVID-19 pandemic is another trend we should look into. UpNest analyzed the Federal Reserve's economic data to see what happened to the prices of building materials over the last year and a half. Indeed, as you can see on the graph, there has been an increase across all basic construction materials, with the most significant increase in the price of wood by 19.6%. These upside swings have majorly affected residential real estate prices. In 2022, experts expect the price of hardwood lumber to go down significantly, a trend which already started in the last quarter of 2021. This will have a positive effect on affordability, although house prices will continue to rise, reaching yet another all-time high. Actually, speaking of house prices, Freddie Mac, the Federal Home Loan Mortgage Corporation, predicts residential property prices to go up by only 7% in the 2022 real estate market. I am saying only 7% because the appreciation rate this year reached 16.9%, an increase from 11.3% in 2020. What this means is that home values will continue to increase, but the growth rate will be slowing down to more moderate figures. Will rising real estate prices continue to keep buyers out of the market? The answer is no. Flattening house price growth rates, combined with the comeback in inventory and the return in investors' confidence, will bring back many buyers to the market. These are mostly first-time buyers who couldn't keep up with skyrocketing home values, extreme housing shortages, and intense bidding wars, so they chose to exit the real estate market until better times come. Well, these better times are expected in 2022. Meanwhile, buying an investment property will be supported by the low interest rates on mortgages. Freddie Mac forecasts that the interest rate on 30-year mortgages will reach 3.5% in the 2022 real estate market. This is an increase of half a percentage point from the 3% value in 2021, which on the other hand marks a drop of 0.1 percentage point from 2020. Despite this expected growth of a 0.5 percentage point, mortgage interest rates will remain historically low, as you can see on this graph. So the persistently low interest rates is one of the factors that will keep the 2022 real estate market strong. Rising employment and growing millennial demand further heat up the market and assure a seller's real estate market as we move into 2022. Just imagine this number. 4.6 million millennials will reach the age at which they typically get married in 2022. That's almost 5 million new homes that have to show up on the market to cover demand just from this demographic group. While more supply of real estate listings is expected, demand will remain strong and continue exceeding the available supply. Sellers will once again have the upper hand in real estate transactions. What does this mean for investors? It means that they have to do their homework well before buying an investment property. New real estate investors need to research potential markets in detail, evaluate rental demand and rental rates, consider their budget, search for the best financing options, get pre-approved for a loan, and work with the best real estate agent in the area. Otherwise, new investors do not stand a chance against those with more experience in the industry and in the market. Another real estate trend that will impact the market in 2022 is rent control. Affordability has been posing a problem not only to homebuyers, but also to renters. And while the growth in house prices is expected to flatten next year, rental rates will continue going up. The good news for investors is that according to the current real estate market forecast, renting should still remain more reasonable than buying a home, despite the expected rise in rents across the country. This means that rental demand will remain strong in 2022, making traditional rental properties very profitable. Actually, since the outbreak of the pandemic, Mashvisor's nationwide real estate data analysis shows that long-term rentals have regained some position when compared to Airbnb rentals. In many US markets, long-term rentals are now the most profitable real estate investment strategy, after years of short-term rental properties being on top. Rent control has been established in some major states such as New York, California, DC, and Oregon, and it's being discussed as an option in other states like Colorado, Illinois, Minnesota, and Maryland. Rent control is something that you cannot legally avoid as a landlord, so you should check out both existing local legislation as well as proposed new regulations and laws before investing in any particular market. So all in all, the real estate market is expected to remain hot in 2022, even if there might be some slight signs of cooling down. But that doesn't mean that you should stay away from this profitable opportunity just because you don't have as much experience as other investors. Remember that the best time to start investing in real estate is always now. So, what are your thoughts? Are you thinking of investing in real estate in 2022? Could this be the year you buy your first rental property, or the year to grow your investment portfolio? Let us know in the comment section below. If you enjoyed today's video, don't forget to give it a big thumbs up and to subscribe to our channel. We'll see you next time.